and that eventually happened. We are right after Fed's Chair Jerome Powell's speech about rates. We have hiked by 0.25 this time, and that's exactly what market expected, but the market didn't expect that we won't be talking about ending up this hiking cycle yet. So the market will be possibly moving up and down until this certainty will come over and enlighten all of us. Right now we are still on the eve of this, I would say, much of the doom and gloomy in terms of certainty days, and the next meeting might be the one of the decisive one, as the May's one hasn't brought much of a revelations. So today we are talking about the things that matter the most for the stocks valuations, and about other updates that also are mostly debated in a web, in a fin tweet, in a Reddit tweet, fin Reddit, and other things that matter and also gather attention most. So I'm very glad to decide to pop in, and without any further ado, let's head on to an first section. So Economy View is the first block for today of our Blockrevision episode. Today we are recording offline, so the chart is off, but we are coming over once tomorrow. So Fed decision day has arrived, and the market was right with a 25 basis point hike today. So right now Fed stands that there is still a heightened probability of elevated inflation to persist. So the Fed don't wanna have this Volcker's scenario of type of inflation to reoccur, and that's why they will possibly just hang on with its very brief and brave stance that the hike is over yet. We need to watch the data in May in order to verify whether there might be a good or maybe not very good decision in terms of ending up this hiking cycle, as that doesn't really happen very often when the Fed or another central bank is just terminating its hiking cycle and right over starting up again. That's why they need to be firm that everything is going in a right direction. If we just watch, I will just show you the kind of a summarization of what Jeremy Powell said. There were normally kind of a some point of views relating to what happened during this First Republic things and SVBs, where this persistent financial market turmoil may ramp up those valuation even lower, and that's exactly what the Fed is aware. And even though they might be hiking interest rates even further, we do know that this inflationary demand still is threatening the market, and we do know that the economy won't get to normal until this inflationary aspects won't get tackled. So Fed Chair Jerome Powell mainly echoed previous messages calling for the US debt ceiling to be raised, but right now there is no agreement in the Congress on that topic. That's why it's yet to be announced and determined. So right now there are signs on heaven and earth that this data-driven central bank may prolong its stance for at least 1 month, and strictly strictly watch what the data will come over. So right now we need to understand that the outlook for the US economy is not all gloom right now. Housing seems very robust, and earnings season has been also good. That's the things that also are possibly the accelerators of another wave of inflation. That's why the Jerome Powell is still holding water in terms of telling about and ending up hiking cycle. So we are coming over once again to our presentation, and that eventually happened. Second biggest demise in history in terms of US banks. JP Morgan agreed to acquire First Republic Bank in a government-led deal for the failed lender. So the second bank, that was the second bank failure in history, and unfortunately for the economy, the most of the economists tell that it's not a question of if, but when other banks failure will also turn up, and these other collapses will get unfolded. So many of the major banks, whether it's JP Morgan or Morgan Stanley, also planning to cut another few thousand jobs, and that's absolutely giving us an outlook for the industry that right now is not boding very well. And the one thing why those dismissals are coming to our economy is this AI acceleration development. So due to ChatGPT, Chegg shares that education company tumbled after recent earnings to a large extent, and that what may happen to many of other educational units that also serve that type of services. So right now, I would say that earnings of many of those companies that are oscillating and revolving around this education industry may be under threat. Also, other companies out of the technological background are planning to pause hiring for roles that are somewhat that might be replaced with artificial intelligence in the near future. And for instance, IBM has planned to dismiss around 8,000 workers. That's an ginormous level of those really been brought to the process. So one of the study also finds that 75% of companies said that they expect to adopt AI tech over the next 5 years. That's why that will be a kind of a solid factor that may speed up our effectivity in this type of works and jobs that are really engaging kind of a much more intellectual eventuality for some kind of much more difficult tasks. So let's find out what about market outlook right after this Fed's speech, and I will just change my view to SPY, and right now we can find this correction move is speeding up. We are rejecting this ceiling of 417. I did expect that we'll really get it through, and we have just rebounded out of the 417, and right now the path of a least resistance is down. Also, US 100 is finding its rejection, and after having a rejection out of the 13.22 thousand, we are right now seeking a bottom at, as I would expect, somewhere around 12.97. That we'll watch right after what will happen right then. So we have formed also a kind of a head and shoulders formation that may bring valuations even lower to 12.81, and that it's a little bit too early to say that we are heading lower to 12.51, but it's not excluded right now. So we are right now under the question. It's sorry, I have switched the windows. So we are under the question whether we are possibly recoup previous highs of August of 22. Right now we need to wait for a bit longer. It looks like more like a distribution phase instead of having another leg upwards, but it's yet to be announced what may happen right after. And in terms of earnings, upgrades outpace downgrades in the US, but it's maybe too little to push the valuation of indexes forward. The market is still afraid, and the retailers are still afraid of persisting inflation, and that's what may spook the market in the next few weeks. So the markets might be going into a full swing, and even though this recently positive surprises coming up out of earnings has been delivered right now, stronger than expected housing market, and also those consumer and consumers' behavior is right now pushing this threats for Fed that this inflation is not done yet. So what about crypto? In terms of crypto, I have a kind of a very interesting stance. So I will switch it to web, and so let's talk about Litecoin. Litecoin is this, as if we just mirror them and compare Bitcoin to digital gold, we may assess Litecoin as the digital silver. And the Litecoin was one of the harbinger, rising Litecoin was kind of a harbinger of coming up the bull market for the Bitcoin back in the two previous cycles. Made it happen this time. Let's take a look at the Litecoin to USDT. Right now the market is not really favoring this asset, as we have rejected and engulfed that a recent candle that had a chance to push the Litecoin forward through this 105 level. I will maybe switch it to the full window to make it more visible. And right now, with this type of rejection, I would find that there is still a higher chance of going for Litecoin lower to 66 rather than over 105, whereas Litecoin's the founder Charlie says it has a potential of 700% gains. So back in the history, rising Litecoin was the very interesting sign that it may even be a some of the first sign of coming of better sentiment coming over to the markets. But right now, those promises need to be postponed for later in time. Right now, the second half of the year for the crypto might be less favorable, but I do find still that we are somewhere in the nascent phase of this next bull market that may end up in the next year. So that's out of this study. Also, MVRV Z-score finds that we have really hit the bottom, and we shouldn't really get back to this lows of 46.9, but it's all depends on the macro. So we have built a ton of liquidity right here, but if the macro won't be favorable for all of the digital assets, I would find that we still would have a chance of getting to the lower 60s levels. So totally, I would say that it's over optimistic right now, but it's a kind of a phase of this coin, and it needs to behave as a marketer for the project. Otherwise, nobody would have an interest in this type of asset. But I would say Litecoin still have some usability with lower fees and kind of a better speed of transactions over Bitcoin. So that was about it. Right now, let's head on next to market movers, and we have earnings in the spotlight. On Tuesday we had Uber, AMD. We'll talk over about this in a second. CVS Health and Qualcomm, and tomorrow we have the most important to watch, Apple and Datadog. So I will just march toward a earnings calendar, and for this week on a Tuesday, let me scroll it down. Where is Tuesday? Come on. Alright, so on Tuesday we had Pfizer that beat expectations, and Starbucks and AMD as well. Uber also has beaten, as it shown better than expected EPS, even though it was expected to be negative. On Wednesday, however, I don't have Wednesday, come on. Oh yeah, it loaded up. So Qualcomm is still to deliver the data. Airbus Group has surprised to the downside, and CVS Health Corp was better. So still we are waiting the Qualcomm, and tomorrow this will be very interesting to watch what the Apple will deliver to the market. Will it save the bulls? Right now it's kind of a difficult to manage, but it's still probable if the Apple surprise the market to that large extent. So that was earnings. Right now let's head on to economic calendar. Let's talk about macro a bit. So I need to get you back to my web window. On Wednesday we had ISM services PMI, and it finally got better to 51.9. We have eventually been able to get, and tomorrow we are awaiting ECB interest rate decision after Fed's meeting. I don't expect a surprises. So 0.25 also should be delivered for euro area. What we have right next. So as a last block, as always, I have for you trade idea, and for trade idea, I would say that it will be very interesting to watch US 100 how it will behave during this recent turbulences out of the Fed's stance regarding its hiking point decisions. So right now I do expect for those latecomers US 100 to rebound out of the 13,000, and I would seek another possibility of having US 100 lower, but for now I do expect that we'll rebound out of this. Let me maybe draw it. I do expect we'll rebound from 13.88 13.088 and right after much even lower to the levels of 12.92. So if it materializes, I would set my short position right like this, but as always observe the price action, whether there is a rejection, 13 point, I would even maybe extend it to 13.12 and as to reach the previous highs, as the market of Nasdaq very often have a tendency to meet the previous highs and right after to revert. So I do expect that it may happen this time as well. So if we manage to meet this highs of 13.14, I would set my short position right from there. And I would set it within this blue box. So I would have my alerts set up right here, and if the price will just approach this level, I would reconsider my bearish type of positioning. And it's regarding this 2.97 risk-reward ratio, so it's still lucrative to the extent to take that bet, and I do find that US 100 will be at lower valuation within next few sessions. So as always, remember about having this risk management type of skills, and don't forgetting about setting alarms of where those pivot points may be. So as always, remember about also paying attention to the data, and just be cautious in terms of taking investment or trading approach. So that's it in today's episode. Thank you very much for watching, and see you tomorrow 9 a.m.